my colleague Dante. I'm David Alex, part of the All American Real Estate team. And today we're going to be talking with Kyle and Naomi from Arnold Insurance. Kyle, could you just do a quick little introduction about yourself?
Yeah, my name's Kyle, Arnold Insurance. We try to focus on what everybody needs, home, auto, flood insurance. I know now it takes a lot of time for little insurance. But we're scratching off this. We started a little over 10 years ago, myself and my wife, and then just kind of grassrooted it. You guys know how it is, the market days, and kind of just flooding away. Our goal was simple, just helping clients be honest and try to find the best products that they will actually need, and then figure the rest would kind of take care of itself. So 10 years later, we have 10 agents out there plugging away with just really the same vision in mind, which is taking care of clients and then doing it in the most truthful way possible in a really complicated industry, which is insurance.
And Kyle, where's your office located?
We're over the Elgin Bridge, over the Maca River, kind of between like Gasparilla Road and McCall. Everybody seems to know our neighbor, Tempe Bobby. The guy's been in the area for like 50 years now. We have like a 5x10 digital sign out there, but they never miss his upside down bicycle.
So obviously you guys are in the insurance industry, and insurance has been a big topic. Obviously with the recent hurricanes, a lot of people are stressing it, especially homeowners and future buyers. It's one of the biggest questions we get asked. Actually, more now than it was previously. I have a lot of buyers that automatically come through, whether it's open houses or private showing on some of our listings. What are they currently paying insurance? What is our insurance going to be? That's like one of the two most popular questions, right? So I know it puts a lot of stress on you guys right now. I'm sure you guys get a lot of those questions as well. But for people out there that are looking to buy, or even current homeowners that want to get new insurance that are currently paying something that they don't think they should be paying, what is determined? How do you guys determine? Or let me rephrase the question. How would you, if you're a buyer or a current owner and you're shopping for insurance, how do you guys pick the right company and who to go with? And then also, what do you look for when shopping for insurance, specifically homeowners insurance?
The homeowners market is definitely changed since I opened 10 years back. It was, in the beginning, it was more, you picked an agent that you connected with. The prices were like relatively affordable across the lines. You had what I consider like doors, which is access to different carriers. And we found you the best price we could for you. Now, especially after Ian, it's been this game of like, I jokingly say it's almost like a chess game of, water heater is this age, so these people will take it to you, and your HVAC is, only 10 years old, so you have access to these carriers. So like, before it was more like pick a house that you love, that you could see yourself living in, and then the insurance was kind of secondary. Now it's more like, okay, I love the house, but is the insurance going to price me out of that purchase? We tell folks like, having an independent broker is nice because we're not tied to just one company. It's like we can try to put our customers with like whoever can give them one service, but also affordability. So we have realtors who come to us. They're like, I have a potential buyer. We need to know what the price is. Let's put it in before we put it in our offer, and we'll shop it around. Now, in the past, it wasn't such a good deal because we would like quote it up, we'd give them a rough rate, and that was pretty much it. Now, even if you're looking at a home, it's best to get those inspections, because if you have like an affordable house, but like let's say they have an older roof, or a roof that is, maybe it was damaged at the end, but they kind of patched it, but they didn't replace it. Now the carrier is telling them, hey, you're going to need a new roof to even be eligible. So I have a lady who literally sits here and quotes 8 hours a day for new clients, just to make sure that the quotes that we're sending out are bindable, but also affordable. It's definitely been more of a process now more than ever.
Would you say, in your opinion, that the requirements for homeowners insurance to get qualified, like is it more strict now with the recent hurricanes?
Yeah. So like in the past, It was kind of like, okay, you got a 4 point back and the water heater needed replaced. And almost on a handshake deal, we would trust that you would replace it within 30 days. Or, hey, the roof is old. You're going to send us your roofer's contract. We're going to submit it to the carrier and they'll give you the grace period to replace the roof. Now it's kind of like they're putting that back on the seller to say, like, you pretty much need your house to be in an insurable state for your buyer to even get insurance. They no longer give us that friendly grace period of trusting that it'll get done. Now it's like it needs done or we're not going to insure you.
Right.
And I was going to ask because in years past, I've done exactly what you said, gotten the home under contract, gotten a contract with a roofer, and then we were able to bind and close. But lately, they just no. They tell you, no, you can't do that.
They tell you no, and if somebody tells you yes, we don't really like to go down that road because if there actually is a claim in that grace period, it's like, okay, was the agent that gave you that grace period, was he just telling you that to make you happy and underwriting actually approved it, or were they just trying to slide one through to give them insurance, but then if there actually was a claim, it would be a problem? We don't do our business like that because we want to make sure if we're binding something and you're giving us the money, that you're in your house knowing that you actually have legitimate coverage that underwriters have accepted the risk.
What is a scenario if you do like one of those, like, hey, we're going to close on a house, you're insured, but you replace the roof in 30 days. What happens if they don't replace the roof? Will it just drop? The coverage will drop?
Yeah, so basically what they'll do is they will follow up sometimes 30 days, sometimes 60 days. The whole carrier's purpose is to get completely off your risk within 90 days or less. Because if they pull off the risk in that period, they don't have to like go through the same hoops as if you get past that 90 days. If you make it past the 90 days, and like let's say the carrier just gets busy, right? Or it falls through the cracks and then like, oh man, we missed that deadline. Now their only option to get off the risk is to non-renew them. So then you have a buyer who like, we don't like putting buyers in panic mode, right? They're already stressed. It's a big purchase. So like, we don't want them to get a cancellation letter from the carrier after they just kind of like hung the blinds and they're like, you're going to be canceled in 30 more days unless you rush to get a job done. We like them to buy a home with the peace of mind of knowing that they have like a solid property.
I was
It
going to
might
say
be.
earlier, go ahead.
I was going to say it might be a really open-ended question, but are there any things, because we show buyers homes a lot, anything that red flags that we should look out for that would automatically deem a home uninsurable?
The roof, I would say, is a big one just because it's costly, right? So like a water heater, I would say the reason most people can afford a water heater to have replace an older HVAC, like let's say it's over a 20-year-old HVAC, and we have to put them with, let's say, citizens are not available, right? So the problem with having a home that has older like systems is it limits their ability to get into carriers that might have more favorable rates. And then going back to the door piece that I was saying earlier, like the less options they have because of the aged or unfavorable system, usually the higher the price because they're not able to like shop through as many options, So if I was going around showing somebody a house, I would for one make sure that the roof is in good condition. If it's a shingle roof, that it's maybe even 10 years or less. If it's a metal tile roof, shockingly enough, a lot of carriers aren't even too fond of those over 15 years. And you're like, well, it's a metal roof, it's a tile roof. These are like 50-year things, And the problem with the tile roof is that if wind-driven rain gets under the tile, it can start to like deteriorate the decking. And because it's tile, it's really hard to tell from a visual standpoint that underneath is kind of falling apart. So like even carriers have shied away from having older tile roofs. I would say roofs are a big
I
thing.
didn't know that the age of like the water heater and the air conditioner mattered. I didn't know that. Did you, Dante?
I think it depends on the carrier, right? Because there's been some situations where I do inspection reports or during an inspection, and the water heater is like, I don't know, 15 original, right? Let's say the house 2006 and the water heater is original. It's over, 15 years old. It works fine, but I've had insurance carriers like say, hey, listen, it needs to be replaced, or it needs to be a credit to have it replaced.
Like older ones where they might be in like an interior closet, like on the older houses where they're not out in the garage shockingly, because it does blow, obviously in your house is flooded. As far as the garage, their thought was like their insurance companies, right? So they think of every scenario possible. So like they're thinking, well, if it's a 20-year-old water heater, there is a chance that somebody could be walking into their house. Most of the time, the water heater is right there in the corner by the garage entrance, and the thing could, in theory, blow and either damage a car or damage a person and injure them. Now, is it as big of a deal as a roof? No, because you can get a convert to swap that out and like.
Well, let me ask you this. So, and I do this all the time. I'm a culprit of this. I don't know if David does this or any other agent does this, but I always go by like what the 4-point says. Is that not what you guys use as a judgment to like kind of determine? I know it's not you specifically, but the carrier. If the 4-point is clean, like then we should be all green light, right? Or is it not always the case that hey, the water heater is great on the 4-point, but they're looking at the age?
They'll look at the age, yeah.
Okay.
And not every carrier. I always reference the door piece because like if you have an older water heater that's in good shape but it's just old, we'll find you a carrier, right? So like we typically will give you the option that we have so you can get to closing, right? And then if a year goes by or 2 years, you're like, hey, I want to shop around. I did end up replacing that water heater. Now more of those options open to you. We trust the inspectors, but because a lot of them are local, you guys know how it is having your partnerships and like people that you trust. They're just John, the inspector, that they have no relationship with, and they kind of know that those inspectors are there to do their job, yes, but they don't want to be the bearer of bad news, so to speak, and say, hey, this could kill your deal because the roof is 30-year-old shingle and it has 3 years left. You might want to get it replaced. They won't put that on the form. They'll say like 3 to 5 years remaining, roof is in fair condition, but the carrier gets those photos and they're like, no, there's a lot of wear and tear, it's over an acceptable age. You'll see a lot of people just denying even giving us the price. Even Citizens, I believe, went to 5+ years. They used to be 3+ years remaining, and then because they have so much business, more than they would ever actually even want, they kind of tighten their guidelines down too.
That makes sense, especially after
I think that's where some buyers get frustrated, right? I know you guys are just the face of the insurance broker. You're not the actual carrier themselves, but you guys get the brunt of it, of the aggravation sometimes because you're the face. What I see from a lot of buyers is that they'll pay for an inspection report, right? And the inspector, and I know, I don't want to speak out of terms, but sometimes you guys and roofers don't always have the best relationship, right? You see it all over the internet. Sometimes you guys have differences on what they think the roof has left on it and what you guys think the roof has left on it. But I see all the time that they'll do an inspection like, oh, we paid $400. He said it's great, but the insurance is like, no, it needs to be replaced or there's an issue with it. And the inspector goes, well, it's fine. So like, what do you do in that stance to kind of proceed and move forward?
I mean, my thing on that is that the inspector might say that something is fine, right? But at the end of the day, he's not the one cutting the check for $100K or $50K or $200K. If
fair point.
So I think like thankfully we're in an area where we have a lot of respectable people, a lot of mom and pop roofers that generally are there. I don't think we're in like kind of like a scammy area. It's a nice area, Port Charlotte, Port Inglewood. But at the end of the day, we're just, I don't want to downplay us and say middlemen, but we're like taking the inspections, we're submitting it to the carriers. The underwriters are underwriting the risk, giving us back their quotes and saying, yes, we're willing to accept this. But a year from now, make sure that they budget for that roof to be replaced, or no, they're going to offer a quote and then they better turn down a risk they don't feel comfortable with than give a price, buying it, and then have a loss 6 months later.
Right. That makes sense.
Yeah.
Yeah, I think it's and as agents, we try to I mean, alleviate as many hurdles as possible before we even get to you. So like if we do handle a listing, I know on the buyer side, when we go look at showings, it's not up to us, right? We're representing the buyer. But if we're doing a listing, we try, and we had an inspector on the previous episode, and we kind of say, we talked about pre-inspections. We try to recommend getting a pre-inspection if we think the house might have some issues or a lot of things in their original, and then try to attack those things and get them done before we even find a buyer and have to go to you guys. They have to go to you guys for insurance. That way those hurdles are cleared. We try to, but sometimes things come up like, the seller doesn't want to replace, a 14-year-old AC because it works just fine. He's never had any issues with it. But at the end of the day,
like if I was a realtor and I was representing a seller, right, trying to sell the house, I would probably even encourage the seller to pay for a limit in 4 point, right? And then if a potential buyer comes around, you could say, here's the limit in 4 point. Take it to your person, have them price out the risk, right? See if it's affordable. And then if they decide to move forward, then they could spend the money and get the inspections in their own name. But you might have more buyers that like the house but necessarily don't want to spend $300 or $400 on the inspections just to find out that the insurance is too high.
right.
Mm-hmm.
I know, like, you can show them what the current owner is paying,
But that might not be equivalent sometimes to. So I was going to ask you that next, actually, on the buyer side of things. And I haven't had the chance to work with you guys directly yet. I've worked with other insurance agents before. But, when we do work together is if I have a buyer and we're looking at a house and they like it, but I say, hold up, let's contact an insurance agent if you're unsure. And sometimes the lender will ask us too, like, hey, what's the current insurance policy cover in the taxes? Because we need to know if you can qualify. So would it be okay if we called you and said, hey, here's an address, what do you need to kind of give us an idea of what the premium is going to be so we can at least, have an estimation for the lender, see if it's not going to be too much or too less?
So, like, if the house is not over 20 years old, we can certainly do that. If it's an older house, which I'm not saying over 20 is even that old, but in the insurance house, it is. The problem is, like, when we're going in there and we're quoting it, right? Let's say you have a 1990 house and you're like, hey, they don't want to spend money on inspections, but we need to know what the insurance is. Like, if we put in discounts from the wind mitigation, right? And we're like, okay, the roof is a 2020 roof. These are basically the discounts that we should be applying, right? We don't know what that 4 point is going to come out as. So, like, if they have, let's say, they have a Federal Pacific panel, or they have aluminum wiring, or they have a really old HVAC, like, if we were to provide you a quote based on assumed discounts, but it would get those inspections, that quote that we give you, you might not even be eligible with that carrier.
Yeah.
So, like, if we stopped doing that, mostly because, going back to the previous point, we like to deliver quotes that are bindable, that are accurate, and not when they take our word for it, they give us the inspections, and we come back and say, sorry, X, Y, and Z carrier is no longer an option because you have something as silly as a 20-year-old shingle, but it might have 10 years left. You know what I mean? I know some places will, just because they're trying to be nice and deliver you a quote. We just we've had too much negative feedback, not even directly against us, but just delivering quotes that then weren't bindable when it came down to actually wanting to purchase the home.
Kind of gives a false sense of hope, I guess, at that point. You get like a nice low quote and then you get the real quote and you're like,
Yeah, and then really we try to protect. Like, we're going to be on referrals. Our whole company is referral based. We don't like buy leads or send out mailers or nothing. We get our leads from realtors that we're like an extension of their quality, right? So when you pass somebody our name, you would know, like, okay, I was in the insurance business. This is the kind of service that I would give to those people. And I know Arnold Insurance will give that to them. And I kind of feel like giving them a price, but not knowing for sure if it's bindable or not, just doesn't feel right. And I also think, like, if somebody is interested in the house, getting the inspections kind of shows they have a little skin in the game too, because they like really want it.
right.
So if we were trying to be proactive and we had a buyer, we definitely want to get the 4 point in the wind mitt to get a true insurance quote. But if we're on the selling side, we should do that anyways ahead of time to service the clientele better.
Yeah, like if I was a seller's agent, I would definitely be getting those inspections and then presenting them to any potential buyer and saying, look, like we already did this legwork for you. I mean, yes, the buyer has to have those inspections in their own name. So ultimately, you're not saving them money, but you're keeping your options to more buyers open because they're not spending money knowing that they don't have a true rate, you know? So like, obviously, like if I'm a buyer and you're like, hey, good news, I have new inspections. For one, you can show them that the systems are in good condition. So they kind of know what they're getting into. And then they can also take those copies, get them to even somebody like us and say, hey, price it's out for me. They know it's affordable. And it kind of just, I always like to do my systems and the process to be frictionless as possible. Right. So having those to the buyers, yeah, it's just easier for them to get accurate quotes without them actually spending their own money until they know that they're locking that house in. You know?
Now I know, like with a home, when you're getting your homeowner's quote, they talk about limits. What kind of coverages do you want? That happens to me a lot on auto insurance, and I'm like, I don't know what I need. Whatever you think. So, what would you recommend for someone buying a home? What should they pay attention to coverage wise? Is there anything you recommend them having a minimum amount of, or things
I
like
was just
that?
gonna ask this actually because when I first bought my home, you get insurance and you're looking at the coverages, and she goes, "You want to adjust anything?" And I'm like, "Miss, I don't know what is even on here. Like, you give me a bunch of numbers here with ranges. I'm like, why is the dwelling more than what I paid for the house? Like, why is my personal property like 300 grand? All I have is a floating lawn chair in here. I'm like, what is going on?" So dive in a little bit about the coverages and like, how do you judge? I mean, I know you guys give recommendations on, hey, you could adjust this, but what should the buyer be looking at when getting insurance? Like, what is the typical coverages and what should you be adjusting to, I don't know, maybe help you out a little bit?
Yeah, so especially in the periods where the market is like, not necessarily saying now, but when the market is booming, right, and prices are just going crazy and there's multiple offers, you might get in a situation where somebody is paying more than what our calculator is telling us to insure it for. And that's mostly because market value and replacement costs are not the same, right? The easiest way to think of it is like if somebody buys a house in Boca, they might spend $2 million, but $1 million might be just the lot. We don't insure the lot. And we also don't take into consideration like the neighborhood that is or the schools that are nearby. And those things could drive up the perceived market value of what someone's paying for the house. What we see a lot from a buyer that's coming to us and like, hey, I'm shopping this out. Why is your quote, 525K in coverage and somebody else might be 300,000, right? The reason why is that we use a calculator, so industry standard calculator, and basically you select the quality grade of the house based on the square footage and the roof material and it spits out a number for us. So like we go on to Zillow, we get in the pictures, we try to show like, okay, it has, crown molding or it has coarse countertops or just like things like that, right? And we pick either above average or custom or basic. And from those quality selections, it will give us a number to insure the house. At that point, you really just gotta trust that the insurance agent is kind of like it's a relationship game. So you're trusting your agent, you're trusting the referral from your realtor that they put you with a company that's trying to give you the most accurate, I guess, number for the replacement cost, right? And then the other things like
Now, I don't mean to cut you off, but is it just for people out there, is the dwelling cost the same as replacement cost? Is it the same thing?
yeah, so like the dwelling in coverage is the calculator that we get back, right? So if we put in there above average quality grade, a 2,000 square foot home, and interior's luxury, the exterior finishes are luxury, whatever, it might say 6,000. But if I was, and we don't do this, but if somebody was trying to deliver you a cheap price, right? They could select economy grade. So like you could get a house insured for 300K when somebody else is saying 6K for the exact same square footage. And the problem that you'll find is like, it's kind of like you don't know it's a problem until it's a problem, right? That's a pretty classic thing to say. And when you actually have a claim and the adjuster says, okay, well, the replacement cost here says above average, then they're going to be replacing your stuff with above average quality grade because that's how we underwrote the policy. But if a different agent delivered one for $300K and they pull the calculator and says economy grade, and you're like, no, like lady had level 4 granite, and they're like, well, I'm sorry, you're getting like plywood,
Yeah.
you know?
So people understand, really, you don't want to go cheaper, kind of like what you're saying, I think, is you don't want to go undercut the coverages because you want to get a cheaper premium, but then might bite you in the butt later on when you actually need it. Now you already placed all these things for having a cheaper home. That's the coverage you're getting.
Yeah, and it's not even so much in like a total loss example. It could be something as simple as a kitchen fire, right? So you can't have a replacement cost calculator at economy grade, but then you have a kitchen fire and claim that you have well-worn cabinets. So I mean, like you quoted that, you weren't covered for that.
Right.
How often
that-
should? Oh, sorry, I didn't mean to cut you off.
That's fine. The content coverage, like you were saying about your chair. So the biggest piece there, that I would say, unless it's pointed out to you, most people don't notice, is like when we quote ours, we'll give you the content limit, which is really just a percentage of the dwelling, right? And the biggest factor is whether it's at actual cash value or replacement cost. So just as an example, you could have a house insured for $400,000 and they give you 25% for your content coverage. So your house is insured for 400, your content is insured for 100, right? You might be looking at two quotes and say this one is 1,800 and this one's 2,200. The contents are the same, the dwelling's the same, everything looks the same, right? But the one that's higher has an endorsement that says replacement cost for contents. They might not notice that, or especially if they're only getting one quote, they won't see that. They'll just see their quote and their stuff will all be depreciated. So like they might see 100K in content limit, but they won't just write you a check for 100K. They'll say like, okay, all your appliances will give you 10K new, but you don't have the endorsement for replacement costs. So here's 2K. Your couch, yes, it was 5 years old, but you don't have replacement costs. So here's $100. By having a replacement cost endorsement on there, it kind of takes away the burden of like proving the age and condition of the item, and more so just showing that you had a couch, you had a TV, and obviously you had dishwasher and refrigerator, and they'll give you the money to get replacement costs, not garage sale prices for all your stuff.
Right. Which is important, especially with water damage or something like that that ruined. I had a lot of clients that lost a lot of their contents.
Yeah, you guys seen it, like whole homes gutted and all their furniture and all their stuff along the side of the road, sadly, and then they might have looked at their policy and said, hey, I have 8K, I'm good, give me 8K and I'll go replace it all. But then they learned after the fact that the agent presented it without the replacement cost endorsement, that just like you were saying, you don't look at these dailies.
Right.
You know to ask those questions.
So we want to make sure that we have the endorsement for replacement costs on any.
I mean, I would say make sure you have the endorsement for a replacement cost if you care about getting your stuff back at replacement cost. But some folks, like, you might just buy your furniture used, and if it gets damaged, whatever. Like, I'll take the savings and I'll have it as actual cash value, and if the worst case happens, so be it. I'll just buy furniture. Like we don't try to like judge or force coverage on you. Our job is to make you aware of the options and understand what options you can or cannot have, and let you decide if you want to spend your money on that. Not us determine whether you want to save the money or spend it.
How often should somebody talk to someone like you? And I'm asking because like I got my homeowner's quote 2 or 3 years ago, and so I have my policy, but I know, especially with real estate in the market, home values can go up, can go down. And I've heard stories where somebody's had the same policy for 10, 15 years. Now their house is worth, 100,000 more. Something happens and they're not covered for the actual replacement cost of what their home would be today.
Yeah. I mean, if somebody is not a sufferer, right? And they're just like, look, I don't want to deal with this. I got my own life, kids, job, whatever. Like, I don't really want to pay attention to the insurance. Or 9 out of 10 times the policy is escrowed through their mortgage, right? So kind of like out of sight, out of mind.
Yeah,
I would suggest maybe every 2 to 3 years. Just not even with the intention of switching, but just to make sure like life happens. You might have got a raise, so you went out and bought all new furniture, and when you got the policy, you were okay with the actual cash value, but now you just dropped 5 or 10K on some new things that you might want the event coverage. Also, more carriers are coming into the market, thankfully. So, like, you might have the best rate 3 years ago, but do you still have the best rate today with the best carrier? At our office, we actually have an agent who literally just spends all day reshopping our clients. So her whole real purpose is to shop her clients. And I already get vouch for me, but I'm big on like I'm sensitive happy stuff, right? What we do that's kind of cool in our office is if you have a policy and like let's say it's $2,000 and your renewal comes and it goes up to $2,500, right? Our system will see what you were paying. The renewal from the carrier will download it and to match it to your profile. It will cross-reference that you have a $500 rate increase. It will automatically send you an email without us doing anything saying we recognize that your renewal went up basically beyond threshold of what we found comfortable, right? And it will automatically set an activity for our reshop lady to start shopping you. So like most offices, it's more of a reactive thing, not a proactive measure. Honestly, with
You guys are actually sending reminders out to owners rather than them having to call in and shop around. Because I was going to ask you that. My next question was, in today's market right now, given the rise, I think it's fair to say that insurance has risen, right? It's higher than it was in previous years. Do you see a lot of people, because I'm a culprit of this, shopping around like every year? Because for some reason, and you guys can answer this, I don't think there's a cap to how much they can keep renewing it, right? The renewal cost goes up. I don't know, there might be, I don't know if there is.
So they have to file their rate increases with the state that they have to get approved.
Okay.
California had an issue with that when they were like, you can't raise anything, and then obviously they have a problem with their insurance, but they do have to get their rates approved. Like they can't just, so their way around that is like filing for the rate increases, but then you also might see your dwelling creep up, right? Some of them have what's called inflation guards. Back to David's point earlier about rising costs of construction and like if you don't check it every couple of years, are you even insured for the correct amount? Some of them will have like a 2% or 4% inflation guard. So like if you don't mess with it for 10 years, your coverage should be basically doubled in coverage because they just keep increasing it year after year. We're big on like letting the client know that we recognize they have that increase and that we have the manpower to shop you around. And it might be as simple as us telling you, look, we shopped you, your rate is still the best, because it truly was still the best, or we found you something better and this is what we would recommend you consider.
I think buyers would or owners would appreciate that too, because it takes kind of that stress off their shoulders. I still have clients now that have already bought that still stress about insurance and obviously taxes, which you guys, it's not a concern to you guys, but both of those go up on a yearly basis. And they're constantly asking me like, hey, like, what are you paying? And I'm like, mine went up too. I gotta tell you. But to shop around, I mean, that's what you guys are here for, to call them. I mean, call them, ask questions. I don't know why people are so afraid to call. Like, I book my insurance agent like twice a month. I'm like, what? You got?
We have a client that calls us and says, hey, shop me around. Like, hey, Arnold Insurance, I love you guys. Your service is great, but the prices have went up. Shop me. Like, we would prefer that much over somebody who is like more passive that then just like doesn't renew and go somewhere else because it feels awkward asking to be reshopped. We would much rather have them reshopped because we're an independent broker. So like we're tied to the client, right? We're not tied to the carrier. So if we have to switch you, and Naomi knows if we have to switch you from Travelers to Progressive to Geico and back to Travelers, we will do that every 6 months, every year, every 2 years, because the goal is to keep you happy and retain you and put you with carriers that are able to offer the best rate, not to like harp on any attractive companies, but if you only have one option, you might have say the client's in your best interest, but is it?
You guys at least provide like options, which I think people appreciate, especially, in real estate. So Yeah, I mean, I don't even talk about auto because I shop every 6 months for that. I mean, I'm sure Naomi can say something, but I shop
I
every
think
six
Dante
months.
needs some help with auto.
Well, actually, right now it's gone down because I got a new vehicle. But yeah, their increases are ridiculous too. Sometimes, I know it's not you, Naomi, but the carriers, they're like $3-4 increase every 6 months. I'm like, guys, I barely even drive. Like I haven't even left the driveway, and I don't like how they go by population either. I've learned this because I shouldn't be penalized. I live in Sarasota, and then. But I'll let you guys talk about that because I don't control
Dante's
it.
about to go off.
I'm just like paying out the kazoo. I'm like, what the heck?
Yeah.
It also depends on the carrier's like financial stability at the time. Like rent fluctuates a lot. So you may bounce around once a year, twice a year. I see people do it all the time. I mean, obviously, the length of time your previous carrier is actually considered as well in your new rate. So, like, one thing too, if you have a deposit to a new carrier with 6 months of your current carrier, you might get a better rate having 2 years with your current carrier to the new carrier than you would pick. So that is also a consideration. Yeah, it just fluctuates a lot more.
So tell me, based on that, tell me if this is true, not to get off topic, but I was told this by somebody. If, I'm going to use a Geico, right? Not that I'm with them, but just throw Geico out there. That's like the most known name. So Geico, right? Let's say I'm with Geico. And then I think I had Mercury in the past. Let's say Mercury, right? Mercury goes, hey, right now I'm like, hey, I'm shopping around with Geico and they're at this dollar amount. And I go to Mercury and they're like, hey, they're $400. I'll get you down to $400 less. But they're below what everybody else is right now. But when they see what everybody else is currently at, they'll then adjust at the renewal period to go back up to what the other carriers are at. Is that accurate? Like, will they adjust automatically if they're way lower than the competition just to hook you in? They'll adjust your premium renewal wise to match the competition. Is that accurate?
Some of them will we see that a lot with Ken. People have heard of Ken Insurance, KIN, and like when they were getting into the Florida home market, they had really low rates, right? Then they got smacked with a couple hurricanes back to back to back over the last couple of years. There's no way that a carrier can stay that low forever, or else they'll end up like UPC. Right? They were open for 20 years. Went bankrupt and closed down. Their thought was, let's keep offering the low rate, hope nothing happens, and eventually try to become profitable again. That didn't help. Ian was like the dagger for them, right? So to your auto point, like if you're getting a low rate, it might be a teaser. I mean, she could say that a lot of the carriers had annual terms. Then they started going to 6-month terms, most likely because they want to adjust your rate every 6 months.
Right.
To remain profitable versus locking you in for a full year and then only being able to adjust you once a year.
Right. Gotcha. That makes sense. I like how you use the word teaser. That's what it is. It's a teaser. They fight you in for 6 months and I'm like, okay, great. This is awesome. Like, why is it so low? And then all of a sudden I get the renewal. I'm like, it's a teaser.
Well, I mean, some carriers too, like it depends on the market, and some carriers are either slower or faster to adjust to the market.
Yeah.
So it really just depends on the timing as well.
And how aggressive they want to be. Like Safeco talked to her a couple months, 2 months ago, and they're like, we're trying to really grow this year. So they bring the rates down to become more competitive. And then if they reach capacity or they're full enough, right, then they can bring the rates back up to get less clients, but they're making more money per client, right? So we are excited. We just got Geico 2 weeks ago, 3 weeks ago, and that to me is almost like a testament to the independent model that instead of being all online, they want independent offices to be able to offer them because they see the value in somebody like Naomi that will like go through and make sure you have the right coverages beyond just liability only or full coverage.
Right.
It's quite in depth.
Yeah.
Now, I know this is going to be a tough question, but everybody wants to know, right? And I know you guys don't control the rates. You guys don't make the rates. You just help find and shop and get them to the best point possible that's offered to them. Where do you guys see rates going? Is there any time in the next year that we're going to see these rates come down for insurance? Like, are we going to see people getting breaks here, or are we staying steady? Or is there possible like where it can still keep rising up and get more expensive? And you guys might not know the answer to this because I know it's kind of hard to put a pinpoint. Same thing with like interest rates. It's hard to ask a lender like where the rate's going. They're like, well,
Yeah, and we don't really tell people like we are. I mean, she's literally like your guys' neighbors. You know, she goes to the same gym. We're here locally. Like, so what affects you affects us. It's not like we get a like an employee discount and roll about the insurance. You know, if we know it's going to go down. The Florida market's been
I
unstable.
don't want to put pressure on you guys, not that because I know you guys are the same as us. People just want to know, like out there, like since you guys are in the industry and you guys have, you do this every day. Do you ever see or communicate with other people that are in the industry that think, hey, it's going down, or there's potential that it might go down? People will start to save in insurance later on down the year, or it might just stay the same. People just have to bear it.
You really just gotta kind of take it as it comes. I mean, lately, within the past year, they have been able to afford slight decreases. Like they do get the notifications from the carriers when there is a decrease coming. I mean,
Progressive went down recently. I mean, I think they had 2 rate decreases last year. Safeco's going down. But that speaks to the point again about having an independent agent that you could call up after you get your renewal and say, look, it didn't go up much, but is there a better option? Because there might be.
Yeah.
You know, you're
And I only ask that because right now, I'll be honest with you, transparent. A lot of my listings that are coming to me, they list the factors. Like we sit down, we talk, and like, hey, here are the factors for why we're deciding to sell, right? And I know there's that 25 to 50% that it's the recent hurricanes, right? There's nothing we can do about those. But the other 50%, and they're honest with me, is like, hey, our insurance is like, I have some people paying $8,000 a year, which is like, you add taxes into that, even if your house is paid off, now it's costing $12,000 just to float your house. If you have 5-6 grand in taxes, $8,000 or $6,000, sorry, the math is bad, on insurance, that's a lot of money just to float your paid off house. So sellers are now like kind of like, I wouldn't say priced out, but they're like, hey, we just can't afford it anymore. We have to go somewhere else. So that's why I was asking the question of like, do we see a possibility?
I would say like if I was to bet on it, that I don't see them going down. Mostly because of inflation and just general cost of everything seems to always go up, never down.
That's what I was thinking. Things just seem to get more and more expensive. So if they're trying to be profitable, and if I actually file a claim and need the money, I mean, they're going to have to have it.
Well, yeah, the insurance partners, because like you have us, then you have the carrier, but then you have the carrier basically has a carrier. That's their reinsurance partner. So like insurance companies buy insurance for themselves for cat losses, right? So the more hurricanes we have, not just in Florida, but in general, like other big wildfires and things, like those all put pressure on reinsurance, which then puts pressure on the carriers to like tighten their guidelines or increase their rates so they take less clients. You might think like if they increase your rate and you leave them, that's a bad thing for them. But it might actually be a good thing for them because your house is older and your roof is older and you're in an area that might have seen a lot of hurricanes recently, so they actually want, as strange as that sounds, they want you to go so they can be more comfortable in the business that they do have and like the less riskier areas.
exposure and risk management.
Yeah, one thing that we have seen is flood insurance.
Yeah.
That was actually our
We're
next
going to get to that in a second.
That was our. So just to speed along, I was going to ask because we get this all the time. So what does a flood policy actually cover, and should people have it?
Yeah. So if somebody's trying to get a policy just to make the lender happy, right? Because that's one of the requirements if they're in a flood zone. A lot of those folks will do building only that either matches their dwelling limit or caps out at $250K, depending on the house. And then they'll exclude contents because they're trying to keep their rate down, right? So obviously there's risk in that, and we let the client know the risk that if there is a flood, which is rising water from a storm surge or water accumulating from hurricane winds, flooding the property, right? They wouldn't have content coverage if they exclude it. Unfortunately, some folks think like, if I don't have it on my flood, I can still claim it on my home, which isn't the case, right? Because you have a flood policy specifically for flood damage. So there's no content coverage there. You have none of your stuff being covered. Back to affordability, like I think it comes down to, are you willing to spend the money which is like the base of insurance. Are you willing to spend the money to alleviate your risk and your concern? Or are you willing to save the money but take on the risk yourself of possibly losing all your furniture, right? We don't determine that for you. We just give you the options and let you decide what you're comfortable with. We know you're adults, so like if you're presented with your options and we explain it to you, we're not going to tell Dante or yourself, David, like you want contact coverage because we want you to have it because you might not feel you need it, or you might say, I mean, if it floods and I'm in that 100-year chance, so be it. I'll deal with that as it comes if it comes.
Well, I think what's happening now is, especially since Ian, obviously, in last year we had back-to-back hurricanes, which is like unheard of. But what people are doing now, at least what I think David and I are seeing from the buyer side, is they're starting to, I don't want to say devalue houses in a flood zone, but they're trying to exclude them from the searches now because they don't, and there's some great houses out there. They're like, hey, I love this house. Oh, but it's in a flood zone. We don't want it. I've actually had more buyers this year ask me in the criteria when they say, we get together, like, hey, let's put a list of criteria together, go look at some houses. First thing they say is, hey, exclude flood zone. I'm like, okay, well, that's going to be a lot of
the cost too, because you have
the cost and then also
policy, tax.
Right. It's the cost of a policy added on to the homeowner's policy where people are like, we want to avoid that. But I always tell people, I don't think you should just be like, hey, not get flood insurance because you're in a flood zone X. That doesn't necessarily mean you're not going to get flooded because we've seen, I'm even in a flood zone X and I've received flooding before. So it's not like that dictates whether you should get it or not.
Yeah, flood insurance, I would say 9 out of 10 people that have flood, they're through FEMA, right? The NFIP program, or they're through what's called a write your own program, which is like Bankers Insurance or Right Flood or Old Dominion. Like those are FEMA set rates for that specific house, right? So like if the seller has a policy and they're saying that they're paying, $1,000 a year, you don't shop flood, right? So like you don't call 10 different agents to try to get a flood quote about your homeowners, and then your flood is almost like an accessory to the home, right? So if they know what the current owner is paying, I would say relatively certain that they're gonna get that same exact price, right? Where we find the issue is like, you might have somebody that has had a house for 10 years, right? And they had their flood policy prior to risk rating 2, okay? And they might pay $800, right? On the policy itself, and not to get too overly crazy here, but FEMA will grandfather that rate to the buyer without the seller giving the policy to the buyer. They don't have to assume the policy. They could just give us the policy number and the carrier, and then the new buyer will get that rate. There's a difference between assuming and then us just taking the price. When a policy is assumed, the seller is actually gifting the remaining term to the buyer. And
I'm glad you mentioned that because I was going to ask about assumable.
Yeah, I guess I really didn't understand that all the way. Okay.
Yeah. So if it's assumed, they don't get a refund back. So like if somebody has a flood policy that they renewed March 1st and their closing is April 1st, they are best to give the buyer the policy number and let the agent put that info in to get that rate versus the seller assuming and letting the buyer assume their policy, because then they're gifting them 11 months worth of premium because they're not going to get a refund.
That I have encountered with a couple of clients where they offered to, they say, oh, the flood insurance. I don't think, is homeowners assumable? I haven't had homeowners yet that's assumable.
No.
Why is that? Why is only flood assumable, not homeowners?
Because it's very specific to the applicant and their loss history on any home, not that specific home. Also, as silly as it sounds, their credit, their consumer rating, right?
Well, the contents too. Everybody has different stuff.
Yeah, and bankruptcies, foreclosures, those things can hurt the price of the new applicant. But going back to the assuming piece on the flood, we have seen realtors let them assume it, which is fine. But it's kind of like instead of me, fixing that cabinet door for $1,000, you just assume my flood, and I'm kind of like letting you live with that credit.
Like an even trade kind of thing.
Yeah, even trade.
That's how they look at it.
Yeah, but the risky part with somebody that has an older flood policy going to the new buyer is that, like, we see it a lot in our area, South Gulf Coast, right? In Gulf Coast. Like, they might have an older rate, and it might be $1,000. but then they're getting a community discount of $3,000, right? So when they're buying the home and they're budgeting $1,000 for the flood, they might not know that the current policy is getting a $3,000 community discount. So every single year, that $1,000 will go up to $1,200. The community discount will go down to $2,800. Then the next year, $1,400 or $1,500, the community discount will go down to, at some point, the community discount will say zero, and their flood policy might be $4,000. So knowing that you're going to have a built-in increase year after year, I'm a buyer and I'm in a flood zone, I would want to see, does the current owner have a community discount that at some point will go away, and I will be paying that sure FEMA rate.
Right.
What does flood cover specifically as opposed to homeowners? So like if a hurricane happens and I lose a portion of my roof and my house gets inundated with a bunch of water, is that covered under homeowners?
Think of them as like perils, where like you have something happen that opens up the policy coverages, or this peril happens and it opens up this policy, right? So like if a hurricane comes, rips off your roof, and your house floods from that opening, that would be under your homeowners because your roof was damaged and that's why the interior took water. Okay? So like, let's say a hurricane comes, you don't have any damage, but I know some parts of North Port where the drainage isn't so great, it might start to rise up water, not draining as well as it should. The water accumulates on the property and starts to flood inside the home. Although you're covered for hurricane coverage on your homeowners, and really simplified the rain came from the hurricane, we would need a flood policy because it was rising water that accumulated and came into your home, not wind damaging your house and then brought water inside.
So a big one, I think this is a good example, is a pipe bursts and it floods like 3-4 inches of water. That's homeowners?
Yes, that's homeowners for
The
sure.
piece of the home is breaking, not...
Yes, exactly. So, like, if you have an ice maker in your refrigerator and the water line snaps, it floods your kitchen, right? That's homeowners. If a dishwasher blows and floods your kitchen, that's homeowners. What we see is like a house that's over 40 years old, right? And they have a water damage exclusion. Like, they might not even know that. Unfortunately, they weren't told that on the front end. Like, hey, your house is older, they're excluding water damage. You got a pipe that breaks, flood your house, and you have a water damage exclusion, then let's be honest, you're here on your phone, e-signing something, and you got a sign, but you didn't really look, and that's why having an agent that you trust that goes over those things is actually really important.
I was just going to say, you're really selling me on having an agent here.
Well, that goes for everything. Nobody really looks at the fine print, take the time to read things.
Yeah.
I mean, I'm a culprit of it too. I sign things all the time.
I just sign it because I'm like, I got to...
Yeah, I mean, like,
I'm like, I'll deal with the consequences later, but you don't want to do that, especially not when it comes to, a $400,000 house.
yeah, I'm sure a lot of your guys' viewers are, like, I would say younger, maybe techie people, computers and all that. Like, one resource that I would highly suggest for them to do is like taking their policy. You know how like you get emailed or mailed, 100-page document that has all the ins and outs of your home policy, right? It's called a policy jacket, right? So you can take that policy jacket, drag and drop it into ChatGPT, right? The whole 80 pages or whatever, drag and drop it in, and sit there and ask it questions. If my pipe breaks, am I covered? If I have a hurricane, what would be my deductible? Then ChatGPT will scan all 80 pages. It will answer your questions based on your policy jacket that tells you every endorsement, every exclusion, every in and out of your policy.
That's awesome.
Yeah. It's time for claims. I'll give you a quick example. I had somebody where the carrier was trying to not give them the recoverable depreciation, right? And they were saying, look, you took longer than 12 months to do your repairs, so we're going to give you actual cash value because you didn't do the repairs in the 12 months prior. They were going to deny the recoverable depreciation portion, which was like $2K, right? So I took his policy, I dragged it in ChatGPT. I took the correspondence from the claim adjuster, dragged that in ChatGPT, and said, create an argument where I could get my $20K for the recoverable depreciation. generating a full response for the insured. They said it. They said, look, nowhere in your 80-page document does it specify this 12-month requirement. That must be an internal guideline. They literally mailed him the 20K the next day. So it's about using tech and tools really for your advantage on what you're doing. She's laughing because she knows that GPT, right?
Yeah, I use it too. It's okay.
Next time somebody hands me a lawsuit or something, it's going to run to ChatGPT to see if I can try to beat this thing. I'm skipping out on any attorneys. These moving forward. That's awesome, though. That's good to know, actually. So I know some of our older clients probably won't be able to log into ChatGPT and do it, but we'll help them out.
Yeah.
Awesome. Great. Well, any other questions, David? Or anything
No,
that
I
you
was
want
gonna
to bring to light, Kyle, that, or even Naomi in the auto industry, doing auto insurance? Anything that we didn't cover they thought was important?
I will say, like, that is one thing about having a broker. Like, that is really the beauty of having the key points that you guys said. If you have multiple products, you have your home, you have your auto, so you've got a classic car too, and a boat, where you're gonna call like carriers like to Dante then like State Farm, like he said earlier, that's your only option. Whereas you go through a broker, you can give us all of your information, and we're gonna search through all these carriers and look through all like with a fine tooth and find what your best options are for either of those policies. And then if say you have a renewal, we can shop one of those things instead of having to sit there and, okay, well, do I forfeit the final discount? Does it make more sense financially? Also coverage wise?
And then you're not duplicating the info every 6 months into different online websites, which you already know they're like funnels, right? That then sell your info to people who buy internet leads, and then you're doing 200 phone calls asking you if you're shopping car insurance.
Yeah, I know you're not.
Like with us as a broker, we take your info, we have it, we plug it back in, we reshop you. Big on obviously being with a broker, because if you go to like, let's say an online website, right? You put it in, they're giving you their rates, or if you go to a call center, and those people, most of them are just working under that corporate umbrella license, right? So they're not going to ask you about liability limits. They're not going to say like, well, what are your cash accounts looking like? Like, are these things in retirement accounts, or can you be sued? What can you be sued for? Do you have investment rental properties that you're not really protected on, right? So those call centers are more so, I guess, geared towards cheap, fast, and let's just take his money. Is he actually being protected in the event of a loss? You know?
So for any policy, I personally will go through all of that. I go through each and every coverage, and I do ask them advice on what your non-protected and protected assets are, kind of gauge where they are financially in order to figure out where they should be placed as far as your liability limit, as well as other coverages too, of course, but explain them to them, give them their options, and then help them make that decision by giving them the knowledge that they're probably not going to get if they call like Geico or calling Allstate or State Farm or something like that, because we genuinely care about making sure you are protected.
And after those calls, you just know that what you paid and what you might have saved. You don't actually have conversations with any sort of knowledge. You just know, hey, I might have saved $10 a month. But it's like when she does her presentation, right, and gets to the end, it's not like, it doesn't even seem like it's a sell. It's more of like, we had a nice conversation. You know that your assets are protected and you're happy to sign up, knowing that you have direct protection in case you are in an incident. Not, I saved a few bucks, but am I really even protected? We see that a lot of folks that are moving down from Columbus, Ohio, right? So people move down and they're like, I had Johnny in my neighbor for 50 years. Like, I went to high school with them, but they might not have ever evaluated their liability risk, and they don't know what assets are protected in Florida. So if they just go online and that agent or call center rep just matches what they have and spits out a price, they might not know that they have 2 rentals down here that they own outright and those are protected, or they have money sitting in a cash account that's not protected.
Yeah.
Every client gets her full conversation.
I can't believe how many people at the end of the conversation are like, I've never had anyone ask me this simply about this stuff. I'm like, well, we care. So let me
I think to add on to your guys' stuff too, and I think it applies to David and I, and even mortgage brokers, inspectors, convenience of service. I know everyone likes to think that they're a knowledgeable person in every profession, right? You have that son's uncle's grandfather who, bought a house 10 years ago and he thinks that he's a realtor and he's going to show you how to buy a house and sell it yourself. Same thing with insurance though, right? I don't want to spend 3 hours calling 6 different carriers and trying to battle who can give me the less price, going over coverages. I can just call you and let you do it. Hey, here's the coverages that I need. Go out and shop and find and call me when you have them. Or if you need anything else from me, let me know. But it's also convenience of service, right? So same thing when people will sell their houses. Can you sell it yourself? Absolutely. Yeah. You don't need me to sell your house. But why do you hire me? You hire me because you don't know what you're doing. One, I do this every day. And two, it takes time out of your day to go do this now when you could be working your other job. Convenience of service is huge. And I think that's something you guys should obviously use, which I think you guys already know.
Yeah, that's why we do. What I was thinking about the frictionless transactions where it's like, we give you the thoroughness without overwhelming you, but give you your options, letting you pick and choose what you feel is important based on your own circumstances, and then let us kind of like custom tailor your package based on our experience and listening to your needs.
No, actually, I am a culprit of doing this. When I first got my house, I thought I could shop around, skip the broker part, right, and got all these carriers. I'll tell you what I did. So I went to like 4 different carriers and I'm going back and forth trying to, and you know what I do? I would call my mother's insurance agent and be like, hey, I have a question for you. And she goes, okay. So I'd ask her a question, just hypothetical, and keep going back to her. And at one point I was like, I'm done. Just here's what I need. Come back and give me something. And that's what I did. So like you think you know what you're doing, but really you don't, and even though you might be saving, like you said, a couple bucks, is it worth the time and aggravation? No, not my point. So
Yeah.
I
love the fact that you explain it, because the only person that ever sat with me and explained to me the insurance was a few years ago. I had a financial advisor and he looked at all my stuff and I was grossly like underinsured. And I'm like, why does no one teach you this stuff? And he's like, I don't know. But, so I love to hear that, because then I started talking to my family about it and help them out. So that would have been great that's just awesome that you do that. So I'll definitely be giving you a call.
All right, Kyle and Naomi, we appreciate you joining us today, and I'm sure we'll do another one down the road, maybe a little more in depth about specific insurance stuff as they come to mind to us, or from experiences that we have with clients.
Thank you guys for doing the podcast with us. And real quick, so it's Arnold Insurance. Where are you guys located?
Unfortunately, no.
And we'll put all the contact info in the description in case anybody wants to reach out to you.
Awesome. Thank you.
All right. Well, thank you guys for joining us today.
Appreciate it.
See you.
All right. Have a good day.
Take care.